Roth IRAs are one of my favorite financial tools. Here are the 8 best features they have to offer. Number 1, saying goodbye to Uncle Sam. Now, it's often said that death and taxes are inevitable, but with a Roth IRA, at least you can get the tax part out of the way in the front end. That's because earnings and withdrawals from Roth IRAs are completely tax-free. Besides your heirs receiving a free step-up in basis when you die, health savings accounts are the only other option I know where the tax obligation is all reserved on the front end. But even in a health savings account, the money is only tax-free if you spend it on a qualified medical expense. And that way, Roths are unique because they excuse Uncle Sam as your silent partner in your retirement portfolio early on in your life. Number 2 is tax arbitrage. Now, Roth accounts basically give you the option of paying your tax on the front end, unlike traditional IRAs where you pay your tax on the back end. But if you can use both of those accounts, you effectively get to choose when you pay tax, so you can choose to pay tax at the lower bracket. For example, when I first started my career, I was in a pretty low income tax bracket. I contributed exclusively to Roth IRAs and 401ks at the time because I knew my income tax bracket was probably going to be higher down the road. So when I made my contributions, they were probably made at a 10 or 15% tax bracket, which is what tax brackets were at the time. Now I would be withdrawing probably in a 22 or 24% bracket. Number 3 is no required minimum distributions. Now, when you reach age 72, 73, or 75, depending on when you were born, the government is going to force you to begin making withdrawals from traditional IRA or 401k accounts. And the reason is that money went in on a tax-deferred basis, meaning tax was never collected on it. Required minimum distributions basically force you to pull the money out, realize the income, and pay the tax. Well, if you're in retirement and you have enough income from other sources, you may not actually need that money. As a result, an RMD makes you pay a tax that you don't want or need to pay. Well, if you have a Roth account, you don't have to worry about that. As you age, this is something you should keep an eye on. You can do Roth IRA conversions. We also have a video about that. We'll link above or in the description below. That's a good way to move a lot of that tax liability from a traditional account to a Roth so you don't have to worry about RMDs anymore. That's as you approach retirement age. Speaking of which, my 4th favorite feature of Roth accounts is Roth Conversions. Now, we just talked about required minimum distributions and how this can kind of create a tax time bomb for you as you age. Well, after you retire and you have some control over the income you realize in retirement, but before you reach RMD age, there's probably a chance you'll have a window in there where you can take conversions from your traditional account, move them to your Roth account, pay an income tax on the conversion, but do it in a space where you can control how much income you're actually realizing so you can pay at a lower rate, get it out of that traditional account so the RMD tax time bomb doesn't go off on you when you get older. And like I said, we've got a video about that, which I'll put in the description below. Number 5 is the Backdoor Roth IRA. As you probably know, there are income limits on who can and can't contribute to a Roth IRA. We'll put those limits on the screen now as I kind of talk through this. The bad news is, if you have a high income, you may be phased out of the opportunity to contribute directly to a Roth IRA. The good news is, anyone can contribute to an IRA on an after-tax basis, then convert that amount into a Roth. So there's one extra step to complete, but the end result is the same. You get money into a Roth IRA. Now, this is subject to the same contribution limits you would have if you were contributing directly to an IRA. Now, you need to keep in mind the pro rata rule, which basically means you'll have to pay tax on a proportional or pro rata basis for all of your tax-deferred IRAs if you do make a conversion from an after-tax IRA to a Roth IRA. Number 6 is Roth IRAs are an ideal inheritance. I've said plenty of times on other videos and in other posts that Roth IRAs are the absolute best way to receive an inheritance, and so far no one has taken issue with that. And the reason Roth IRAs are such a good inheritance is because you get to receive the entire balance completely tax-free. Then you have up to 10 years to withdraw the balance or liquidate it from the account. And in that time, the Roth can continue to grow and earn money completely tax-free, just like it was your own Roth IRA. Most assets you inherit do receive a free step-up in basis, but any capital gains from the day you inherit them thereafter are subject to tax at capital gains tax rates for you. The Roth IRA gets a 10-year break on that. Number 7 is Roth IRAs help avoid a Medicare surtax. If you're a high-income individual, you may be very familiar with the 3.8% Medicare surtax. The good news is, if you pull income from a Roth IRA, it doesn't count against your modified adjusted gross income, which is used to calculate your tax liability for the Medicare surtax. By pulling income from a Roth account instead of a tax-deferred account, you could potentially avoid this tax liability altogether. The 8th feature of Roth IRAs is a backup emergency fund. Even though any earnings and growth in a Roth account would be subject to an early withdrawal penalty if removed before age 59.5, contributions are always available tax and penalty free. This basically means you can use a Roth IRA as a backup emergency fund. So if you're ever in a real pinch for cash, your Roth IRA may be able to bail you out. With that said, this is the last item on the list because I would not recommend that you ever use your Roth accounts for an emergency fund. Instead, have an emergency fund of 3 to 6 months expenses somewhere else. That way you're not reducing the amount of money or capital in your Roth IRA that's allowed to grow over time. Once you remove money from a Roth account, you cannot replace it. That's because once Roth contributions are removed, they can never be put back. You're effectively forfeiting years of earnings and interest just by taking those contributions out. Having an emergency fund ensures that you won't have to touch your Roth accounts instead. For more on Roth accounts, you can stay tuned. We'll have a link to the playlist at the end of this video. We've also got lots of links to other videos similar to this one in the description below, and links to our website, markmoney.com, where we've got tons of information about Roth accounts, 401ks, really anything personal finance related you can think of. Thanks again for your time. God bless and take care.